Carley's one of the better technicians I know. Welcome back to Face, Carley. How are you?
Thanks, Dale. Thanks, Dale. Good morning. I'm good.
Great to have you. Now, Carley's work, Jim Cramer promotes a lot and shows he's one of his main technicians. And there's a lot happening in commodities, Carley. So um, I'm betting that you have some commodity plays that you're going to be talking to us about today. And
I
also,
do.
I'd be interested is if you like the bonds after what it did last week. Seems to me like it was a pretty good dip to buy. Um, what's on the menu?
I agree. We're on the same page in bonds today. I think we're going to mostly take a step back and look at monthly charts, so like
Oh, love them.
big picture kind of stuff.
Yeah,
Let me
great.
just share my screen here. Okay, let's start with bonds since you mentioned it. Okay, I agree with you that last week was a significant event. I have this pivot line that I've been kind of following for, well, years. And it it a couple of months ago it tested it pretty sharply and
Yeah,
it's held that. That's in the futures, that's about 113-ish at this point, 113 and a half maybe.
yeah,
As long as that holds, I think we're in business for a run all the way up into 130s, 140s. I'm actually targeting about 137. This is
it's a
big
big
picture.
trade.
Yeah,
Yeah,
that's not going to happen in a week.
it,
That's going to take a
it,
long time.
and it doesn't look like a lot because it's a monthly chart. I mean,
Right.
if you put up a daily, 135 would look like climbing Mount Everest.
Exactly. And if you see, this is let me see, 20, whoops, like a $25,000 move on a futures contract. I'm not saying it's going to be easy to catch all that. I'm just kind of putting it in perspective. And it does look, actually, even with that, it kind of looks moderate or even small if
Hmm.
you look at the volatility we've had in the last few years. But look at where we came from. This is a more normal market environment before the Fed got involved.
Yeah,
uh, Before the Fed got involved, that would be an unbelievable move. Now it's probably just a sizable move. But path least resistance, I believe, is up high, higher for bonds, lower for yields. 10-year note has kind of a similar chart. This one's
yeah,
real messy. It's hard to see on the screen. There's a lot going on there, but it's the same idea. The major trend lines and pivot lines have held, and we're most likely going to see lower yields, higher
yeah.
treasuries. So I agree with you.
Okay.
Um,
Nice look. How are you approaching it with options or futures or what? What's
um,
the
we've
strategy?
so what we've tried to do, and actually our timing has not been great in this market for whatever reason. We've had a few. We haven't really lost a lot of money, but haven't really made as much as we should have. We've been early on a couple, but basically what we're trying to do on any big dip, put on some sort of option spread where we're generally buying a call spread. So buying a call near the
Okay.
money, selling a
Yeah.
call out of the money, and then also selling a put to pay for it. Because our thought in the big picture is volatility in treasuries has been abnormally high the last couple of years with all the chaos and the repricing and all that kind of stuff. But I'm old enough to know that bonds are usually a very boring market. Usually there's just nothing going on there. And so I think the option vol is going to continue to kind of suck in and get cheaper. So we're not scared to sell puts to pay for call spreads that we buy, as long as we do it on a dip. And so that's kind of how we've been approaching it. So,
Near those lows, I don't know, what was it, a month ago?
uh-huh.
Um, I have a stock trader buddy of mine that I work with and TLT was down. It was down. And he goes, Coach, they're selling puts. They just keep selling puts. I go, the market's down. TLT's down. And they kept selling puts and it did mark the low. Do you pay
Mm.
attention to option streams when you're
Um,
looking at
I
sweeps? They call them sweeps when
Yeah,
there's big size. You
we
pay
don't
attention.
like, I mean, I glance at it. I don't pay a lot of attention. Usually when I see real big option trades, I actually uh
Want to
try
fade
to,
them?
yeah, right.
Okay. All right.
So usually when I see everybody doing the same thing, that's usually when I'm thinking the other way. No, it doesn't always work, but
Okay. Anyway, that was a tell.
uh
We were making lows and there was huge put selling.
yeah.
And usually, you know what, when it comes to selling options,
Hmm.
that's not the public selling options.
Oh no, yeah, usually. Well, the interesting thing is because I am a broker, so I get I see a lot
Yeah.
of talk to retail traders. I see a lot of what's going on, and to be honest, um, option selling has started to really creep into the retail space
Wow.
pretty largely. A lot of brokerages on the future side of things, brokerages don't want anything to do with it. They don't want anyone selling options because it's a lot more work to manage risk. We
Right.
do it. We're rare. We kind of specialize in that type of account. But what worries me is I'm seeing a lot of retail traders that I don't believe they fully understand the risks. I think they're just doing it because their friends are doing it and it's kind of become, caught fire and they're selling puts in the S&P and that to me makes me very, very nervous.
They're selling
Um,
puts and they're
puts in
selling
the
vol.
yes, but in the S&P, so they're just
Yeah.
doing it across the board, which we all know how that works. I'm going to pull up a
Yeah.
monthly chart. In the S&P, um, stock markets almost always go up. So if you're selling puts just blindly,
Right.
it's going to
Yeah.
work most of the time. But the problem is, I
Except
don't
that
think,
one time.
yeah, I don't think these people, I think it's the strategy's growing too big for the space in that. I don't think that all the people doing it really fully understand what's going to happen if the market goes into correction mode. I mean, even if you look at this correction in 2020, which was massive, massive,
Yeah. COVID. Yeah.
it looks like a blip on the screen, so they're not that's not on their radar. Um, that could, I mean, that's going to blow up the whole the whole thing. So
You know, I
it,
have that
I'm
line
concerned.
going back to those
Yeah.
three lows. You know what formation you have here?
What do you?
Megaphone.
Oh, yeah. Yes,
It's a megaphone. So you
it
you know
is.
you get higher high. It's one of the
Mhm.
toughest formations to trade because people get bullish as you make new highs
Yeah,
and bearish as you make new lows, but those are actually turning points. So look at
they
where
are.
Carley's megaphone comes in, bottom black line.
Yeah, you don't want to look at that. I don't think that we're going to see that price, but I just put it out there so that people understand nothing is impossible. And I've,
Yeah,
tried to get put in people's heads that, I've lived through the financial crisis, been there, done that. Risk comes really, really fast. And I'm seeing some things today that we saw prior to the financial crisis. For example, your previous guest was talking about the yen carry trade. I remember that was the big hoopla right before everything melted down. Right. We're seeing the yen carry trade. We're seeing people selling puts that I don't think they understand the risk. We're seeing leveraged ETFs. There are a lot of retail traders I talk to every day that are loading their boat, not risk capital, investment, life savings in leveraged Nvidia stock. Uh, if something ignites,
yeah.
that's just gonna, it's gonna be fuel to the fire.
A couple of weeks ago, Helene Meisner, do you know who she is? Helene?
Hmm. I do. Yeah,
I think she writes for the street.
he does. Yep.
She said the trend
Hmm.
we hadn't had a reading in the trend like that. I think it was 2 weeks ago, before we started turning around, in 30 years. So anytime I hear something that hasn't happened in 30 years, it's pretty significant.
Yeah.
So that is another sign. So we'll see. You think I mean, we're not that far from 54 to 54.50.
No,
Um,
we're right there.
it's a
Um,
layup, isn't it? A layup from here?
well, I mean, we don't know till we know. And the
Yeah,
election
sure.
cycle is going to be very interesting. But me personally, and I could be making, biggest mistake of my life, but I've gone almost all treasuries in my across the board.
Okay.
Savings accounts, retirement accounts. That's probably stupid. Most people should not even try to do that. But I'm sitting here thinking 4 or 5% risk free, get paid while I wait and see what happens. Because this is going to be really scary. And if you see these blue lines, the blue lines are what I expect to be like a normal market trajectory. And we're basically trading out of bounds in this market. And we have been for a long, long time. According to my analysis, and even if you look at fundamental number crunching,
Yeah.
fair value in the S&P is somewhere closer to 4,500. We should be trading in a range between 4,500 and 3,300, not 5,400 and 4,500. So in my opinion, everything is just really, really out of whack. Euphoric. Um,
Yeah.
it just I don't think it's sustainable. So it's just a matter of time, in my opinion, but we'll see.
Okay. I agree with you that it's a time to become, when everyone's euphoric, conservative, especially with
Right.
retirement funds. Yeah, there's nothing
Sure.
wrong
Yeah.
with 5%. You know, there are
Yeah.
some bulls that are looking for 6 and 7,000 S&Ps.
Yeah, I've seen that. I've heard about the melt up, and
Yeah,
I finally concluded, look, if I miss it, I miss it. I'm not going to
yeah,
lose any sleep. I'm just going to relax because I was young during the financial crisis, but I do remember the just the pain and the peril that I felt, and I'll never forget that feeling again. And I don't ever want to be there again. Because I mean, I live in Vegas, and I was holding two houses. I thought I was rich at the time. I wasn't, but you know how kids are. You think
yeah,
you're rich.
yeah.
I had money in the markets. I had two houses, and houses dropped 80% here. I had them paid off, so it's not like it was the bank's money. I had my stocks were
Yeah.
tanking. I mean, it was an awful feeling. I never want to put myself in that position again. So I've kind of learned from that, and you roll the dice and see what happens.
So what a great person to work with that has experience a kick in the teeth. And I'd say that there are a lot of traders that don't even really remember COVID because it came and went in 2 months, the
It was
damage.
so fast. Yeah, it was
Yeah.
so fast. But you didn't really
So
feel the pain there. Yeah, it
yeah, a
happened. You just
lot.
didn't feel it much.
Oh, I felt oh, if I was going to buy puts, or
Oh,
I
right,
saw
right.
that and I wasn't there. And anyway, but a lot of young people have not lived through any kind of bear stage and risk.
No,
So,
no, and I'll just one last thing, and then we can move on to something else. But I'm getting a lot of comments like on Twitter and emails, and people are getting very, very upset because I mentioned living, being debt free, paying off your house, and the young kids are very, very, very upset that anyone would pay off their mortgage, 3 to 5% mortgage when they could make 20% in the market. So this
okay.
kind of mindset really, it really
Yeah.
makes me wonder. I remember in 2006, people were trying to sell me on taking home equity lines to get equity out of my house and then putting it
Yeah.
in the market. And it's the same kind of stuff going on today. So we'll see,
Okay.
but I'm
So
nervous.
people are doing that. They're tapping that
Yes,
equity and
they are.
risking it in stocks
In
like Hood
Correct. Yeah. And
and
nothing good can come
GameStop.
from this. Yeah.
Yeah.
Nothing good can come from this.
A
Okay.
veteran. Okay.
Yeah. All
Okay.
right.
Oil.
So this is oil, and oil. I'll be the first to admit I was looking for oil on this rally. I thought we were going to make our way to 100. It obviously didn't happen. Jury's still out on whether or not okay, so I'm going to say a couple things here. There's a lot of reasons for oil to go up. Fundamental reasons. Seasonals are relatively supportive, stable. Speculators are not sitting on large positions. In fact, they're kind of only mildly long, and speculators in crude oil are perpetually long. So what that means is basically there's a lot of buying power on the sidelines. So if oil prices do stabilize, there's plenty of money that can come back in and push prices up. Um, Obviously, we have Middle East, all those sorts of stories. But the one thing that can the fly in the ointment is going to trump everything else, and that's recession or lack of demand. And that's the one thing that actually I think is a real risk. So we'll see what prices do with 72. 72 is going to be, we'll say between 71 and 73. We'll say this is a trend line that dates back to 2015, and it
Yeah.
did break it once during COVID, but I'm not good. I don't let that. I mean, COVID was COVID. It's kind of an
Right.
outlier. Had we not had COVID, we probably would have held here. And so here we are. This is the big test. If it breaks below 71-ish,
Yeah.
that's really just not good news for anyone that's bullish oil. We probably dropped $10 immediately, maybe even in a day. So be aware of that. If we
Okay.
do hold, which seasonally we should, it's all going to really depend on, in my opinion, it really depends on if the stock market um, continues to grind higher. If it stabilizes and goes higher, oil will follow. If it doesn't, the stock market's going to pull everything else down. And when I mean everything, I mean everything. Everything will become correlated. Everyone's going to hit the sell button on everything at the same time, and it's all just it's going to become a vacuum. So we're on the cusp, and we'll see. The next couple of weeks are going to be pretty interesting.
I showed a trend break in the dollar. Your dollar calls have been pretty good. You have a view?
Yeah, let's pull up the dollar.
And what you were talking about crude, and I keep thinking about, I think you liked Nat Gas last time, and we rallied to $3 before
Mm-hmm.
this recent pullback. It looked pretty good. But go
Yeah.
ahead.
Yep.
What do you
Okay,
see?
I'll look at Nat
Okay.
Gas in a minute.
Okay.
So this is the dollar. This is my big monthly chart. We've been just going nowhere, obviously, for a
Yeah.
while. And you can see the Bollinger Bands, which is basically a measure of volatility. Standard deviations are sucking in and becoming very, very tight. So that's probably a sign that we're most likely going to, sooner rather than later, get a break one direction or the other. It's not going to stay quiet for long. That's not how markets work.
Yeah. Right.
Um, but I mean, I really don't have, we're right in the middle of the lines that I've plotted here as far as our trading range, and we've stayed in there. So I'm what it does in the next week or so, I don't know. But the big picture, I'm bearish. Any rally up to 107 ish in that ballpark, I'd say is a good sell because I think the overall picture is dollar probably is too expensive and it probably needs to come down. I mean, in the overall scheme of things, dollars spends a lot more time, 90 to 100, not 100 to 110. So I do think we're probably going to be bears up here. But other than that, I mean, what it does from 104 is it's hard to say. It's a
Looks like a
crapshoot
bear
for me.
flag from 115 to par, and we've moved
Mm-hmm.
sideways since. So,
Yeah, I can
um,
see that.
so a break under 100 would measure 85.
Yeah, yeah. My line comes in around 91, and then if it
Yeah.
breaks that, we're probably looking down here in 85s. I agree 100%. And I think that will happen. The problem is this is hard for on my analysis. It's hard to say, when it maybe we do this for another year before we break. I don't know.
No way.
Um, I don't think so
All
either.
right.
But let me show
All
you.
right.
Actually, while we're talking about currencies, I do have my eye on the yen. We've been buying calls in the yen, and we got a little more aggressive a few weeks ago. We suggest our clients buy futures and then buy a put underneath it, just in case, like, these markets have been breaking a
Yeah.
lot of rules. So we wanted to have
Yeah.
some sort of protection just in case the yen goes to zero, because who knows what the heck is going to happen in these
Right.
markets.
Right.
But seems like a really, really good time to be long the yen. I mentioned before the financial crisis, we had a situation where the yen was really, really cheap and the carry trade unwound and it became massive very quickly. And I'm wondering if we're going to get something similar. So we
Yeah. It's a
weren't
good
against
shot,
buying a
Carley.
future and buy a put and see what happens. So we're doing that. Natural gas. Let's take a look here. Whoops.
That was a
Okay.
nice. Okay.
Oh,
Yeah.
you
So
want
we
to?
got back to 3. Yeah. We got
Yeah,
back to 3.
we can. This is the daily chart, just so
Right.
you have the picture. This is the big picture in Nat
Yeah.
gas.
Yeah.
I think we're going into a period of this right here. What we did from like roughly 2010 to 2020, a decade.
10 years. Wow.
Yeah, we basically spent the highs were in the fours, mid fours, and that was temporary, and the lows were in the twos. I think we're basically going to be trading 2 to 4 for a while now,
Okay.
until we can really get the export situation figured out, which seems to be something that takes a lot longer than anyone wants it to take. That's probably the reality. And there's plenty of nat gas out there. There's really not any type of supply issues. So I think that's what we're looking at. So we actually have bearish option spreads on where we sold a. Let me see if I can find it real quick here.
So Carly specializes in options positions on futures. She does futures too, but comes up with strategies based upon all the Greek, right? The alpha,
Yeah.
the beta, the gamma, the
Uh,
theta.
yeah, this is it. Okay. So this is what we were doing about a week or so ago. Yeah. Okay.
Okay.
So we basically are playing the downside. So maybe this is a daily chart, by the way, just to give you perspective.
Yeah.
We were a day early. We started putting this trade on here when it was testing the 200-day moving average. Should have waited a day or two, but that's just how these things work. So we had plenty of room for error. We were selling a 350 call and then using the proceeds to buy a 270, 240 put spread. I do think we're probably going back down to these lows here. You can see this is around 240. So that's how we're playing it. Now, natural gas is not a market to be just like nonchalantly selling call options in. It can rip your face off. So don't do this unless you fully understand what's going on and what the risks are. Most people, natural gas is the kind of market that goes up a lot faster than it goes down. And so everybody, speculators tend to get really excited when it starts going up because they've seen what can happen. I mean, just a few years ago, we saw Nat Gas go from like the threes into the almost 10. And those things can happen, but they're very, very, very rare. In the big picture, natural gas goes down more than it goes up. So it's okay to try to play the downside as long as you understand what you're getting into and give yourself lots of room for error. You can see that we're basically giving ourselves $1 to be wrong. And $1 in nat gas is quite a bit. So yeah. So
Don't try this at home.
Yeah, don't try it at home.
As George says, that's true.
Right.
Work with a professional. So how do people open accounts with you?
Okay, so we are decarleytrading.com. This is our website. You can see decarley, DECARLEY trading.com. We are a boutique brokerage shop, futures and options brokerage. Where we're different is we answer our phone, we answer our emails, we make sure everyone gets very quick and efficient service. And we also do offer trading ideas. So that natural gas spread that I was just showing, our clients received an email and a text message with those details. And then they can decide if they like it or not like it, and they can participate or not. But we give them the information and try to teach them as we go.
Okay, and looks like a good way to get introduced. Carley has a free newsletter trial right there.
Correct, right. Yep, you can just go to the website, click here, fill out your information, and we'll let you follow for, I mean, it's a month, it's a 30-day trial, but honestly, we usually keep people on for a couple of months so that they can get a good picture of what's going on. So you'll see all kinds of commentary, trading ideas, and if you like what you see, we're here for you.
Carley's a pro, and I know. So I've talked to quite a few people in the last 10 years. So I'm at my 500,000th interview. Just kidding. Well over a couple thousand anyway. So Carley, really appreciate your looks and your thoughtfulness and experience. You're one of the better minds in the commodity option world. Appreciate you being here and at a fine face.
Thank you. I appreciate it, Dale.
All right, Carley Garner. Follow her on X at DCarley Garner and go to her website and check out her work. It's top shelf. All right, so you're very welcome. Thanks again, Carley.
Yep.
Carley Garner, everybody. And you could join the team in about 19 minutes on the Morning Edge. Good luck today. Good hunting. And don't just count your pips, count your blessings. Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.